Friday afternoon, everyone. Thank you for joining us for Founders and Funding. For those of you that are new to this, the goal of this weekly session is to learn from founders and their funders on how the deal came together, what it's like to work with investors, and discuss the current strategy of building a business, and really get behind a company and how it's got to where it is currently. So thank you all for joining us. Thank you for taking a lunch on a Friday. I think it's Friday with us. It seems that every week just disappears quicker and quicker right now. Just like traditional TechTO, we want to be interactive. We want to promote what we're doing. So while you're watching us on your computer or your handheld, go grab another mobile, open the device, snap a picture with your setup, with your screen, make it a selfie, that you've seen around Twitter, and share it via Chrome on your LinkedIn or Twitter with the hashtag TechTO. We really appreciate it. Before we go live, there's a couple things to know about our setup. Right here is a chat. I will be monitoring chat and then taking the questions from it and asking both Wes and Neal some questions based upon what you do. Also, if you look up there, there's a polls, and we always ask some polls to understand who's here, what they're looking for. This week we've added a couple new ones. If you can take some time in the next 45 minutes just to answer that, so I can think about who we get on our next shows and we get feedback on how to make this better. We want to make sure we're always taking care of our members. Your first time here, welcome. TechTO was started to help founders and their teams learn how to build businesses. We do many different things, so check out techtoronto.org. So today, I have my first Americans on the show. I think so far we've had people from around Canada, but I thought it's time to actually get to what everyone wants, go south of the border. And we have Wes from Third Prime and Neal from Kafene. It's interesting. How did I meet Wes? When I look back in my notes, I actually got introduced via someone in Florida named Jim Horowitz in 2018. And then, with the idea that Wes is interested in the Toronto ecosystem, might get active up here. But it took us to I think mid 2019 to actually meet. And then Wes has now been making frequent trips up to Toronto. So maybe I'll ask Wes to sort of introduce who he is, what his fund is, and then I'll shoot it over to Neal for the introduction. So
That's
Wes.
great. It's great, Alex. Thanks so much for having me. Really excited, as you sort of mentioned, about the Toronto tech community, the venture scene up there. So first off, I want to thank you and TechTO for hosting this event and allowing me to participate. As Alex mentioned, I'm a managing partner and co-founder of Third Prime. We are a early stage VC firm based out of New York City. We lead investments and we follow on heavily. Basically we invest anywhere in the U.S. and Canada. Although I would say we've got a real interest in what we call emerging geographies. I think Toronto might have already emerged, but anyway, we like basically sort of looking outside of San Francisco in the Valley. Just feel like there are a lot of great companies, and we're happy to jump on a plane and try to identify those. A few more things on Third Prime. We are industry agnostic. We're generalists. That enables us to be nimble. Can really support just exceptional investors across different fields. That said, there are a couple themes that permeate our investments. We very much believe that doing good is good business. So while we're not an impact fund, we very much though like to invest in those companies and entrepreneurs that are sort of mindful of all stakeholders. We think that the most important businesses of the next decade will actually be very responsible. They'll have a lot of empathy for more than just the investors. They'll be thinking about their employees, the customers, the suppliers, and so on. So it's something that we think about. Also, very much look to invest in those companies that are sort of must-have versus nice-to-have on sort of a product front. I guess one way to think about that is sort of just results in us playing lower on Maslow's needs pyramid. A couple other things I'd point out about Third Prime. We're unique in that we run a high conviction concentrated portfolio. So, perhaps you might have heard of sort of the spray and pray model, which some early stage investors run. We're very much the antithesis of that. We like to run a portfolio of 12 to 15 investments per fund. that enables us to not only focus our capital, but just as importantly, our human resources to really support those entrepreneurs to hopefully achieve great success. Last thing I'd say is like I said, we like to lead. Sweet spot for us on check size is typically going to be $1 million plus or minus. That said, we've done pre-seed rounds, leading with 250, and we've led, sort of late seed, almost call it early A, with as much as a $3.5 million first check. So I'll pause there, but happy to double back on third prime at any point.
Yeah, so that's a great introduction, Wes. And I think we'll go to Neal now, who, when I asked which founder should we have on the show, he, without hesitation, Wes said Neal. So Neal, introduce yourself, give us your background, and tell us what Kafene is.
Yeah, sure thing. First of all, thank you so much for having me on the show. Really, really excited to share the Kafene story. So yeah, my background, I graduated Princeton in 1999, which makes me feel sort of ancient in the startup community. But I spent most of the first part of my career on Wall Street as a derivatives trader. Like yourself, went to Wharton to get my MBA, although we didn't overlap. And post MBA, really went right back to Wall Street. I was there from '99 basically through 2016. That was sort of the first phase of my career. In 2016, I was very lucky to be able to essentially create a new career and pivot into something that I was much more passionate about, and that was fintech. I did a lot of exploration as to what type of company I would want to join or be a part of, and opportunistically got introduced to the team over at Octane Lending. Octane Lending at the time was only 11 people. I joined as the 12th person. Very quickly got promoted to CFO from sort of a miscellaneous, title that I had before that. 2 to 3 weeks after that, I was on the board, and that company, for those of you who aren't familiar with it, has really been a rocket ship. So from the time that I joined in the fall of 2016 through today, that company is a lender. It's a power sports lender, and it's originated, coming up on $1 billion worth of loans. So it has had a very successful trajectory.
Sorry, Neal, can you tell a bit more about Octane and like who do they lend to, so people understand?
Yeah, Octane Lending is, as I mentioned, a power sports lender. And the question is, what are power sports, right? Power sports are things like jet skis and motorcycles and ATVs and UTVs, sort of all this sort of high adrenaline stuff. And Octane, which was started in 2014, really came into existence because, like you'll see in Kafene, there's a dynamic that occurs at the dealership that is clumsy. Okay, you have customers coming in to buy goods, they need financing, and technology in a lot of these niche verticals, power sports being one of them, was not able to make the financing process clean and efficient for all the stakeholders. And Octane really came into that market, started building technology in 2014, really launched in earnest in 2016 as not only a technology facilitation platform, but also a balance sheet lender. So those loans were not just going through the platform and then being put on somebody else's book to hold the risk. Octane was really, eating what it cooked and taking that risk on balance sheet. And so, as I mentioned, that company's had phenomenal growth.
So you had quick success there. You're CFO on the board. Why? And it's a rocket ship. So why leave?
Yeah, it goes to the privileged position I had and the luck that I had to experience just an amazing company from pretty close to the ground floor and have the confidence to feel like I could do that myself, right? It is incredibly hard. I don't want to at all understate how challenging it is, but I felt comfortable seeing the inside to say, you know what, I think I understand what it's going to take. And I've got the conviction that I can do it. And I've always wanted to create a path for myself. And a large part of why I left Wall Street was because I felt as though I wasn't building anything. And in being a trader, I wasn't being part of that creative process. And from a personal standpoint, not a professional one, but from a personal standpoint, I wanted to really do something on my own. And so in many ways, it's funny you phrase the question, well, if it's a rocket ship, why leave? I think if it hadn't been a rocket ship, I wouldn't have had the confidence to leave.
So bring us to the decision to leave. What did you have Kafene in your mind, or what gave you the confidence? Why'd you leave? What was the next step?
Yeah, so it wasn't that caffeine was front and center in my mind. I just knew I wanted to do something on my own, and I was very lucky in that I had the support of the people on the board, Wes being one of them, as well as the management team at Octane, to take some time to really explore what would make sense while fulfilling my duties as CFO. So, we basically had a conversation around me staying on an extra 6 months to facilitate both ends, make sure Octane was in a good place, and make sure that I had chosen a business that made sense. And so in evaluating what I wanted to do, I was really trying to solve two things. And I want to reference something that Wes said earlier. The first thing that's really important is, does the market need this? Is it really addressing a need? Or is it just kind of a fanciful idea? And I said, look, I want to do something where I know the market needs it, not I suspect the market might need it after I build it, right? So one is a need. And then the second thing is that I wanted it to be really mission driven. So it was incredibly important to me that I was solving a problem that not only made me feel good about what I was doing, but also that had sufficient scale and scope to really make an impact if we get it right. I'd seen how hard it is to really build something, and I want to make sure that if it takes 5, 10, 15, 20 years to get this exactly right, that the effort is worth it from a personal standpoint.
Sorry, I want to take go on.
Go ahead.
I want to take a step back because there's something I heard a few minutes ago. So you said, honest, I didn't realize this. So Wes was on the board and you went to talk to him at that point. And then I'll flip it to Wes for a second. So Wes, here's your CFO, a fellow board member saying, hey, I want to leave. Like, what was your initial reaction?
Well, look, obviously from the standpoint of our Octane investment, we were, sort of sorry to see, Neal, look to, different aspirations, but, the way he handled himself there, he came to the board very, very early, as he touched on, he said, listen, guys, my aspiration is to run a company. I want to be a CEO. I feel like I've learned a tremendous amount here and I've got some ideas. And so, he said, listen, I'll be here, as long as you need me. So he didn't put, the board in any tough spot. We had plenty of time to go out, look for his replacement. And, once we found him, not only did, Neal just walk away, he spent, a meaningful amount of time making himself available to, ramp that CFO up. And he's continued to make himself available, as needed for Octane. So it was a very, very smooth transition. It was one where he had, the blessing of the board to, to move on and sort of, look to his next chapter.
Okay. And then Neal, you said you were looking for something mission driven. So did you leverage Wes and the team, or how'd you go about figuring out?
Yeah, I really did. I leveraged one thing that's a theme throughout this part of my career, right, has been that I'm very focused on leveraging relationships. As I mentioned earlier, I think this stuff is hard, right? And it's so hard that if you don't use the team that you've got and you don't use the relationships that you have, you're just handicapping yourself. So I met with Wes and his business partner at the time, Keith, to bounce around ideas. I met with all of our board members, I think without exception, to kick around ideas. Hey, I know I want to do something that's broadly speaking in this box. What do you think? Here are the ideas that I'm thinking of. And I had, I kid you not, I had a list of 128 different types of specialty finance businesses, right? Everything from litigation finance to multifamily housing. And I was really exploring everything. And, it is a testament to not only the patience that I think everybody on the board had in terms of going through this process pretty systematically, but also the desire to see me find something that I was passionate about that really helped kind of identify what the North Star ultimately ended up being.
So I'm actually going to go to a question there from Kai, who, because you said there's two things. You're looking for something that has an impact and also something that's needed. He goes, What metrics do you use to assess the market really needs your product?
It's a very good question. For me, it was something basic, which is to say, is it already being done in some form or another, and are companies already serving it, right? So can I identify specifically, yes, this is a problem that this ecosystem is trying to solve, right? Therefore validating that it's a real problem. There are already people working on it. Now, the disadvantage there clearly is that you're not first, right? So it's not as if you're gonna, from my perspective and the way that I was approaching it, It's not as if I was going to identify something where I was going to be the absolute first one doing it, because it was a requirement in a sense that somebody was already working on it and that people were already doing it and the customers existed, measurable activity in whatever it was that I was doing.
Okay, so you were going through, I guess, lots of different financial products or financial opportunities. You were talking to your board members. How did you just finally find and decide on the one you decided on, and what is it?
Yeah, so the problem that ultimately ended up being the focus was, and it's funny, I came at it from so many different angles, but the problem is, how do you extend credit or credit-like services to the majority of people in the United States that don't qualify for bank financing? People don't realize, I think oftentimes, that you've got over 100 million people in the United States alone who don't qualify for prime financing. And what happens typically is that these people get left behind. You know, we oftentimes look at countries like Thailand or Africa or India and say, oh, look at the amazing things they're doing with respect to microfinance opportunities to lend to these people who need it. There is a massive population here in the United States that is just truly underserved from a credit perspective. And as I started doing a bunch of research into what it would take to really help solve that problem, what I realized is that it really takes a huge ecosystem, right? You've got people who need to provide personal unsecured loans. You've got people who need to provide credit scoring, alternative scoring systems, right? You've got people who are doing things like finding better ways to extend mortgages to these people, doing things like insurance products to this population. What I wanted to ultimately focus on was something called a lease purchase contract. Now, a lease purchase contract is a highly detailed, and it's a regulatory structure. It probably doesn't make sense to go too much into the details of what it is, but the benefit of it is that it is an extremely customer-friendly solution for certain categories of goods. Categories include things like furniture, appliances, electronics, things that have durable value, right? And what makes it so friendly is that it's not debt. If a customer can't make their payments, it's not as if they have this debt obligation the way they would if they just borrowed money at a pawn shop or a payday lender. So we can afford these customers a very flexible structure through which to demonstrate that they can pay, that they want to pay, that they want to build their credit score. And if they fail for whatever reason, coronavirus, COVID-19 stuff, it's not as if they're left with all this debt. They just tap out. We unfortunately will take the loss there. But from a customer standpoint, what a great option for them. And then the nuance here, and this goes back to, I think, Kai's question, currently, so before Kafene started, this was a $20 billion a year market. Okay? There is no modern solution here. So Kafene is saying, okay, here's an awesome problem. Let's be consumer-centric, and let's apply technology to really bring this thing out of the Stone Age into the modern era.
Okay, so you found the market, you had the idea.
Mm-hmm.
Did you go raise money? Did you go right back to West and raise money? What did you do next?
Yeah, we did, and this I think goes back to what I'll call relationship / borderline co-development. Okay, so while the relationship was present and warm with a lot of the board members, Wes and his team in particular were incredibly instructive in the 3 months it took to validate the idea, right? So we took the idea from, sort of inception in January of 2019 to visiting retailers, setting up conversations with experts in the industry, doing a bunch of research, actually going out on the ground and trying to see what was wrong with the competitors. And Wes and his team at Third Prime were very involved the whole way. I would say so involved that it was clear that they were going to participate because they had been so involved from the jump, and we all gained conviction together. It wasn't as if we picked an idea and then said, okay, that's it, exclude everything else. Things just started to drop off as this became the leading candidate. Wow, it's got a great market. It's recession resistant. There's no technology. You can create a moat. All the types of things that really matter. And so that was done together. And to sort of complete the initial financing round, we were trying to think about who would be strategically good for us to have in addition on the round. And we identified 2 partners. One is Valar Ventures, which is run out of New York, also invested in Octane. They knew me very well. And the other large investor was Upper 90. They're a debt fund. This stuff is expensive. You need a debt partner that's aligned. And so we were extraordinarily fortunate that I'd worked with all of those people before and was able to express the work that had been done, the conviction that I had, and the market opportunity. And that first round came together, I would say, in a very fortunate way.
Cool. Just going to shout out, Chris, I see your question. We'll get to that a bit later. Wes, tell me what was going through your mind and your team's mind during those 3 months while you were looking at this opportunity.
Yeah. So, the sort of first box that we looked to check is team. And had the good fortune of knowing Neal for a period of time. Comment that we often use around third primes: we like to invest in lines, not dots, right? So if we can start to see something's inflecting or that sort of somebody sort of moving in the right direction, and we've got a bit of history with them, it just makes sort of our investment decision much easier. So team was something that we're able to check very early here with respect to Neal, and just to kind of elaborate on that a little bit. What do we look for in a team? Shorthand is sort of IQ, EQ, grit, integrity. Those are sort of the 4 buckets, and obviously there's some nuance around that. But we found that it takes a lot to succeed. The most successful founders are very, very talented. And so team is something that we spend a lot of time thinking about and sort of working through. So we had that one here. We given that we run that sort of concentrated portfolio, we have the the ability to do meaningful research. It was nice that we along with Neal we're spending the time sort of in the trench and sort of just canvassing the market to really understand the competitive landscape, what the customers wanted, what wasn't being fulfilled. So we got a real keen sense around sort of the product, and the vision that Neal had was going to be one of those must-haves. And the other thing that we think a lot about is addressable market. Neal touched on it, was 20 billion. We think that's growing rapidly. I think that unfortunately COVID is impacting a lot of people, and there are going to be even more folks that need sort of Kafene's product, and the way that they're sort of thinking about servicing that community. So we knew it was a large addressable market. We felt like it was growing rapidly. So a lot of those boxes checked. And look, we're a year and a half, I guess, into this adventure now, and so far so good. Neal's been exceeding all forecasts, built just a fantastic team. And we're very proud to be his partner.
Can I ask a couple questions here? One is, you talk about team. I don't think Neal knows how to program, and so what was the rest of the team at that point? And how comfortable, how important was it to have the other people around the table?
Great point, Alex. So when I think about Kafene, I think it requires expertise in both finance as well as technology, right? This is a true fintech company, and so Neal is top of the charts when it comes to finance. But you're right. I mean, he doesn't have a coding background. He's not a technologist. So we immediately identified, listen, we need to sort of get him a co-founder, try to help find, someone that could be his partner that could fill, those blind spots that we had identified. And so, fortunately or not, Third Prime had another portfolio company. Things didn't work out. But the co-founder and CTO over there, who was an incredibly talented, individual, we connected him with Neal. We let sort of that relationship evolve and develop, and fortunately, they felt like there was just really good synergies there, good cultural fit. And next thing James Schuler is the name of that gentleman. Joined Neal as his co-founder, and so we felt like we sort of had that side of the house, a good foundation as well. So had a really nice marriage here. What we thought was just a fantastic sort of finance mind, real visionary, with an individual and sort of relationships that could actually build the necessary technologies.
So Neal, when you got introduced to James, how much pressure was to make that relationship work, or did it just naturally work?
We're very lucky that it naturally worked. I referenced earlier that I had a lot of confidence I could go do this on my own. What I failed to mention was that there was one thing that scared the crap out of me, right? And that was, what if I can't find the right co-founder? Without the right co-founder, without the right technical person to really balance out the skill set and round it out, can't get off the ground on something like this. And so I would say there was a tremendous amount of pressure to find the right person. But from the minute I met James, it worked. It was just clear that he was highly intelligent, highly motivated, creative, personable, presentable, right? Everything that you really need in a co-founder, and the chemistry worked as well. So we just got lucky.
Cool.
Really lucky. Yeah.
Just a note to the audience, we're going to do about 10 more minutes. So if you have questions, just put them in the chat. I noticed it's been a bit quiet today, but please go ahead. So let's take it. So you've now spent 3 months researching it. You have a co-founder, you have money from Wes, and a couple other, and Valor, and a third firm. What's the first thing you do? What is this? It's March, April of last year, and
this is May.
This
actually.
May. So typically you raise, most rounds you raise for 18 months. So what was your goal to accomplish over, with this funding, and what did you go do?
That's a very reasonable question, and I wish I had a better answer for you. I really don't, and I say that deliberately. We had a plan, right? It wasn't as if we didn't have a plan. We had a plan of, okay, we're going to make the following 6 or 7 or 8 hires, and we're going to release product on this kind of timeline, and we're going to try to hit these benchmarks, and we're going to accomplish this, and then we're going to get to that. In reality, nothing went according to plan. I mean, the beta was
even before March this year.
Well, so we thought we were gonna really launch in November. That was the timeline. Okay. In retrospect, it was absurd because we hadn't thought to think about something. It's a little detailed, but it's important. There's no servicing system that handles lease purchase contracts. So let's say we could even get the front end out the door and have leases coming in and those obligations coming in. We had no way to service them. So we found out a month into our build that instead of just using somebody else's servicing system, we were gonna have to build our own from scratch.
Oh, wow.
Right? So it took us 2 months to build that. And now we have an amazing one, and it's obviously bespoke for our business, but it just was something that we didn't really see coming. I also, and I'm a little embarrassed to admit this, I had no idea what a head of product was or what a product person even meant, right? But it became pretty clear that early on that we were trying to cover so much ground that we needed to have somebody come in and actually take this role, which was not initially budgeted for, right? We identified amazing talent really early on the data and analytics side. Now that hire was probably a little bit early relative to where we were, but it was a hire that was, this is a person named Justin Miller on our team. He was so well qualified for where we knew we were going that we went ahead and made the hire early, right? So I would say that yes, we had a plan and we had a roadmap, but all kinds of deviation from it. And through that process, and we'll probably come back to it, but through that process, I continued to have meetings and try to develop new relationships and meet more people in the ecosystem. And I'm going to lead the conversation a little bit here, but there was a clear need to bring in some strategic investors that we had met that were in related businesses that wanted to be part of the cap table. And so we ended up doing another round of financing in December.
Interesting. And Wes, as this was going on, plans were changing. You hear we have to do a strategic investor round. What were you thinking? How are you reacting? How do you help support these decisions?
Yeah, well, we, are very sort of founder friendly. We understand that, we are not sort of living out there and, in the arena every day. So, we very much look to, the entrepreneurs and those teams to sort of, guide, where they want to go. And, we try to, as a former lawyer, I use the Socratic method to sort of ask a lot of questions, I think, and hopefully sort of tease out, that we really understand sort of where we're headed and why we're going there. But, it's very unusual for us not, to be supportive, right? We do a lot of work on the front end. We have, immense sort of trust, in these teams and the entrepreneurs. And so, we were, quite supportive of Neal in that decision and recognized that it was going to be the right call.
And then who were the strategic investors you brought in December?
So the round was really led by a company called Global Founders Capital, who has a very big name. It's a very strong fund out of Europe.
Yeah. Sommer
but-
Brothers, right?
Correct.
Big LPs.
Correct. They have a lot of experience with companies like QuadPay and some other people in the fintech ecosystem, right? The other part of it, though, so they did about half the round. The other half was, I probably shouldn't name them by name, but people who are chief risk officers at other companies,
okay.
People who are private equity investors who have invested in similar types of businesses, right? And so they wanted to get meaningfully involved, and it's very important for me, again, as I referenced earlier, to make sure that I tap the full power of the network and to get everybody aligned. And so that's why we really did that round.
So I'm going to get a couple questions from the audience, but before, so this is December. I guess the round basically, I assume it closes early December, but so now you get to January, seems like you're ready set to, basically scale and have success, and then COVID hits.
Yeah.
So what's been the impact? Because I imagine people, because I think the key thing for you is you're helping people in-store purchase, not online, from what I understand.
That's right.
So
that's right.
How's that impacted your current plans for like the next 6 months? And B, how's that impact your overall vision of where you want to go?
It would be pretty hard to overstate the amount of impact that it's had on our business. It has been hugely impactful. Okay? So you're right. We launched in January. February, we had amazing growth. The first week and a half of March, our growth was exponential. Oh, wow. And the business was really firing in every way that we could control. We were doing a great job. And then coronavirus hits. And so unfortunately, people aren't allowed to go to stores to shop. And by the way, the two highest concentrations of exposure that we have are Los Angeles and New York. Mm-hmm. So these markets went into immediate shutdown. So we had to actually stop originating. So we stopped doing leases probably 5 or 6 days before the stay-at-home orders were put in place, where it was a little bit early. But it was clear to me that consumers were probably underestimating the amount of economic impact that this was going to have, and that from the perspective of would these people be able to make their payment obligations, it was clearly, hey, we better slow down and let's see how this shakes out. And so we've been fully paused for, I guess 4 weeks now, 5 weeks. We're not going to reopen the business until those stay-at-home orders are lifted. Candidly, our stores are all closed, right? Yeah. And that is really hard. It's hard for the team. It's hard from a morale perspective. It took our fundraising trajectory, which, we were gearing up. I mean, the deck is done. Our Series A deck, looking for that 10 to 15 million raise, that was supposed to happen last week, right? Closed it. We were supposed to close it last week. That's clearly off the table. And so we have to make a lot of adjustments the way that everybody has to. I think there is some positive here. You asked, how does that impact the long run? I think in the long run, the vision is still really intact, right? The vision is still, broadly speaking, how do we use technology to bring a better financing system to this consumer base? We still think we have some pretty cool things that we're working on, and that plan is still there. What is interesting, however, is that we were forced to lay off 6 people, right? We are being way more disciplined about how we spend every single dollar than we were 3 months ago. 3 months ago, I think there was a certain amount of, we don't have to focus on efficiency. We have to focus on growth and speed.
Yeah.
Now it has changed to, this might last a while, so let's make sure that every dollar we spend is well spent. And I think in the long run, that discipline is going to absolutely be beneficial to us. But in the short run, it hurts. I mean, there's no other way to put it.
So actually, I see a question from Aditya for Wes, which I also wrap in my thoughts here too. It says, how are you going to adjust your high conviction lens when evaluating potential investments in a post-COVID-19 world? And and I have a follow-up question there is like, how do you deal with what's going on with Neal now? If he was looking for an A round, there might be he might need an extension to get to because we don't know when the store's going to open. So first, the question, if you Wes, you can answer a question from Aditya, and then I'd love to hear how you support Neal to a point where we're back to normal and you can raise that A round.
Yeah. So, how are we, as a firm adapting to, what we expect to be, the post-COVID world? And look, it's hard to forecast, right? I mean, we're spending a lot of time, at the moment, me and the rest of the team thinking about, what are trends that are likely to sort of lead to, good investment opportunities. That's some work that we're doing now, but if you think about sort of our fundamental approach to investing, it's team, which that pre-COVID, post-COVID is not going to change. What we're looking for there, true visionaries, people that sort of have that grit and the ability to adapt and be nimble and pivot. Right, we've always sort of admired that in founders, and that's certainly important today. Still, the large addressable markets, and while we think that there's going to be some push-pull on which markets are going to be sort of impacted negatively and positively here. We're, like I said, we're doing that work now, trying to figure out, what's going to be sort of most viable. It's for us, not change things tremendously again, other than just trying to do some of that research, trying to be thoughtful about, where should we be spending our time, what markets are going to be most ripe. If there's more specific questions, I'm happy to, sort of take that. But, back to Neal, Alex, again, we know we're playing a long game. We get involved pre-seed, seed. These are 8-year, holds, in many instances. And so, one thing we've learned is try not to get too high or too low, over sort of one quarter, 2 quarters, even a year. In some instances, we've seen companies that, were, look like they were probably laggards in a portfolio that are now, sort of leading, those funds. So we've seen, sort of take drastically different turns, and those that are performing very, very well can hit obstacles and sort of go the other way. So what we try to look for are sort of the quality of execution, the quality of that team. Neal has faced a macro event here that was solely out of his control, right? But we were fortunate in that we did get a good sort of 6-9 months to watch, sort of how he was executing, how he was building, and have tremendous conviction in that. And so, as a matter of fact, we've participated in every single round, that Neal's raised. We've been trying to buy up ownership here because, again, whether it's 6 months or 16 months before we, sort of get our feet back under us again, we very much believe that Neal's taken the necessary actions. He's got the runway, and it might take, 8 or 9 years. We might get pushed out a little bit, but we're still, highly convicted in where this thing's headed.
Cool. That sounds great for Neal as well. I'll go to Joelle's question. She was talking about financing. She's asking, can you clarify? You opened up your round in December, not for the cash, but more because you wanted to leverage and incentivize the strategic folk with related experience on your team or advisors. So I guess was it predominantly to get more incentives aligned?
Yeah. So so there were really kind of 2 angles to it. The first is that as we started to launch and actually had something that we could talk to people about, people became interested and said, can we invest? Are you still in your seed round? And I said, I don't know what you want to call it, but we just closed. We have enough money. We don't really need it right now. And we're not going to start another round just to facilitate a angel or strategic check. So those things were just kind of accruing. And in parallel, I had gotten to know the Global Founders Capital people. They had their team in New York had reached out to me probably 2 weeks after we closed the round with that first round. And so when they first reached out, the messaging was, hey, we don't need any more money here, but happy to stay in touch, right? But I did that every 2 weeks, every 3 weeks, checked in with that team for 4 or 5 months. And so when it came time in late November to December, where one of the conversations was, well, hey, when are you going to raise your next round? And my answer was, I don't know, probably sometime soon. Global Founders was essentially indicated that they wanted to do something. And so we put the pieces together. And one detail that we didn't cover also, we did just raise a small bridge round last week. Now, it's not the 10 million I was looking for, but it's sufficient to get us through the next 12 months. And the way that came together was also very similar. We developed, right after we closed that round in December, and we capped it because we didn't want to take too much money. We capped it, and there was one investor there. It was it's called company.co. They're the old Grand Central Tech group here in New York. And they made a very small investment to just get to know us. But I've been checking in with them every week, every 2 weeks on the back of that investment since December, right? Since early January. And when this happened, when the COVID-19 stuff happened, they said, well, what are you thinking about doing here? What are you going to do? The $10 million round is off the table. How is this going to play out? And I said, I think we need this many dollars to make sure that we're very well positioned when we re-engage. And they said, okay, well, have you discussed this with the other people on the table? I said, no, not yet. And they said, well, look, to the extent you're ready and you want to get something done, count us in for blank, right? And so that round also came together last week. And I'll say this because I know you've got a lot of founders. It sounds like, oh, it's just lucky at every step of the way. And I'm not going to say it's not. It is lucky, but it is a tremendous amount of work and relationship building. People, I think, there's always two sides to it if you're looking at it from a VC's perspective. From a VC perspective, they're saying, well, does the business idea make any sense at all? And then they're saying, well, can this group or person or team execute it? With our business, with Kafene, it is execution. It is a really hard business to execute. And so when people see, okay, over 2, 3, 4 months, as Wes has indicated, that this is the right team to execute, that's when I think people get more comfortable about coming in for more.
Wow, that's actually an awesome answer, and it's great to hear you've got more funding. We have a few more questions, but I'm going to pass them because we're tight against time. I might send them to you after by email to get answers and then follow up with everyone on that's viewed this and also with our greater community. So first of all, thank both Neal and Wes for showing up and helping out. This was very insightful, and I think lots of founders are going to be thinking about how to communicate to potential investors differently, and they might be following up with Wes to see if he wants to finance their round. Thank you all for coming. Thank you, Neal and Wes, again, and I'll see everyone next Friday.
Thanks, Alex.